Okay, chapter 3, we're going to look at some more investment informations and security transactions. And in chapter 3, we'll learn how to do uh, stop orders, limit orders, things of that nature, special types of orders to help enhance your profitability in trading. We're also going to look at using the internet. The internet is an investment tool. Types and sources of information. So this chapter will really help to get you some more ideas about how to trade stocks, how to find stocks to invest in, how to not particularly analyze them financially or technically. Those are later chapters, but this chapter is more about where's the information at? Where can I get the information I need to start thinking about stocks and companies, and what about brokerage accounts? What type of brokerage account should I have? What are the advantages, disadvantages of different brokerages, full service, discount, things of that nature? Are they going to, charge me a monthly fee? What services can they provide? What can investment advisors do for me? Should I join an investment club? Things that we'll talk about all this stuff. Okay, so this class is only a piece of your financial investment education. The other piece and the greater side of it is your own self-education. And there are plenty of websites that are educational in base that will help you to grow and expand your understanding and knowledge of investing. And investing is a huge world and many tools and techniques and a lot of learning to be involved that really can't be covered completely in one course. So much of the reinforcement or the learning is going to be on your end, and it's sort of like, I remember that, in statistics class, I'd learn a bunch of statistics and then take another class that builds upon it, and I found that I kind of don't remember what some of these terms are, some of these formulas, and I have to always go back and relearn it, and then that reinforcement helps to make it solidify it. So generally, if you learn something once, you forget it pretty easily. But if you learn it multiple times and apply it, that's when you really understand it and you will never forget it. So a lot of your financial education doesn't really stick until you have a personal interest and you're remembering certain things you learned in class, but reinforcing it and applying it in an investment sort of position or maybe in a job. But what's great is there's a lot of, if you have questions about certain things, there's plenty of areas on the internet to get answers. There's also this, I think they call it the Investopedia, which is sort of like a Wikipedia for investments, which is a good tool. I see a lot of students cut and paste from this tool a lot. Here's a hint. If you cut and paste into Word, all the links come over and sources of where you got your cutting and pasting, and that's where I send most people to academic dishonesty. So be a little bit smarter about it and don't do it. Investing tools. There are plenty of investment calculators, investing tools, and on these investing websites for financial planning, retirement planning, how much do you need to save, how long will it take you to, at a certain rate of return, different tools to screen stocks. So you could put in, sort of use like a computerized screening, and you say, I want stocks that have a PE at this level and a PEG ratio of this level, earnings percentage at this level, growth in sales at that level, dividends at this percentage, and it goes through every stock available and comes back to you with a list. And Yahoo Finance has a pretty good stock screener that you can use. Okay, and there's also tools, plenty of websites for charts to track performance and investment, and to get quotes as well. So let's just pop over to Yahoo Finance for a minute. Okay. So in Yahoo Finance, they do have an area where you can create a personalized portfolio, and in that you can group together a list of stocks, put in price points, things of that nature. Although because Google is free site, you have to deal with the advertising I'm struggling with right now. let's see. If I go to market data and stocks, there's a lot of additional information here. Let's see. Okay, so you scroll down a bit and it says more market stats, and here's the stock screener. And like I was saying, I can pick a particular industry. Let's see, maybe apparel. And then I can put in a share price. Maybe I want it between $5 and 50. Market cap, PEG ratios, which is something we haven't learned yet, but we will learn. And then you could say find stocks, and it'll go back whatever characteristics, and they found 18 stocks that fit my particular characteristics. So this is a way, if you want to be able to, you have a concept of the type of stock you like. I like a stock that has 20% or better growth in earnings and 20% or better growth in revenue, has a dividend. You can set all these parameters up easily in Yahoo Finance and find the different stocks that you like. So DSW, let's check them out. Now, this is a stock that has a relatively low PE, and I think this is a shoe company. And here you can get your basic technical analysis or basic chart, and it gives you a chart and a bunch of technical analysis tools, which we'll cover in a later chapter, chapter 8 or 9. And you can also get key statistics, a profile in the company to see exactly what they do, where they're located, key statistics to give you a quick overview of the most reviewed statistics. So this company has a growth in revenue of 4%, a growth in earnings of 1.8%. In the last 52 weeks, the stock has gone down 26%. 2.6% of shares are sold short. So there's a lot of information here to help quickly determine whether or not you're interested in that particular stock. So that's just one tool. Google has a similar financial site. If you go to the Google and then the button where they have more tools to use on their main site, they have a financial site as well. Okay, so let's move on. All right. So many sites, the textbooks will list a couple of sites. Many sites have financial calculators that can help you estimate a number of financial situations, not only return for stock or investment strategies, but also mortgages, car loans, savings accounts, different things like that. Zacks is another type of website. They also have stock screener that you could utilize to screen stock and help. So right now, if you're in the mode on the virtual stock market, you're not sure what stocks to buy or what to do, start looking at some of these stock screeners. And you can kind of play around with their profitability, their growth, a bunch of characteristics to get a list of stocks that are stocks that you feel are rather particularly strong. So stocks with higher earnings, higher revenue growth, these are stronger stocks. You may want to look for stocks with lower PEs. There's a lot of different criteria that you can utilize. Now, the good thing about these internet tools is that you're doing the research yourself on your own, and you're not being influenced by other people. Remember, in the stock market, everybody's trying to influence somebody else. So when people talk about a stock, they probably own it, or they work for the company, or they may have not even really done their due diligence, and they're just shooting their mouth off because someone else they heard talking about the stock. So that's why other people's advice is a dangerous thing to take. So if you can do your own individual research, that's going to be a lot more productive for you. And it doesn't take much to get to a point where you can conduct your research and understand what the most important principles are for reviewing a stock and determining whether or not to invest in it. I mean, stocks are unpredictable because companies are unpredictable. Some companies can have out of nowhere a hit product or a problem with a product. There was a company They make yoga apparel, and their stock symbol is LULU. Yeah, and they had a problem, which to me seemed like an insignificant problem, but really devastated their stock. They made a pair of, I guess, tights for women that were too sheer and you could kind of see through them or too revealing. So they took a lot of flack. They had to recall the product, and customers got upset, and the stock market did terrible. But then recently, it left the stock undervalued for a while. And recently, just last week, one day it shot up 20% when they came out with earnings. And, they confirmed what I was thinking, is that this is such a minor issue. I don't know why people are all getting their panties in a bunch over it, so to speak. Right. It's a very fast growing, profitable company, but some negative news got out there. A lot of because maybe it was also like sensational, because it was showing nudity or whatever, that a lot of news feed picked it up and scared a lot of people out of the stock. Well, really was just a simple thing they could easily correct, and maybe they took a loss over it, but it shouldn't have. The stock shouldn't have lost half its value over it. But investors tend to overreact. You know. And then what happens is the earnings come back, sales come back, and investors say, oh, I guess I was wrong about that. And then the stock market shoots back up again. The stock of that company shoots back up. So this is why, if you could do your own research and do a little critical thinking about certain things, you may be able to cut through the media hype of the bad or good news in certain companies. It works the other way. Sometimes good news comes out and the media overhypes it, and then the stock goes up much faster than it should. So be very skeptical of advice, especially free advice, because it's free for a reason. They want something from you, either more support for the stock, or um, and you don't know what the age of that advice. It could have been more accurate at one particular time, and now it's less accurate today, especially if the stock ran up because of it, and now it's at the top. All right. Now, a lot of mistakes new traders make is a frequency of trading. And this is one thing that you can test. You're supposed to trade frequently in the virtual stock market, and that's okay. But in your real account, you have to be wary of trading too much and second guessing yourself and ringing up a lot of commission costs. And everything's designed, all the people selling you brokerage accounts and all the stockbrokers, everybody wants you to trade a lot. It wants you to be a day trader and trade your stocks back and forth a great deal. That has proven statistically through numerous research studies does not make you the most amount of money. It actually causes you to make more mistakes and not do enough research before you act when you trade too aggressively and too quickly in your own brokerage account. And the way the news comes out, it makes everything seem like a life and death event. And there are just some companies that, if you owned IBM over the last 50 years, no matter what bad news came out, you always did well with that stock. And there's a lot of companies like that you don't really, even though there's a problem, you don't need to sell it, because long-term prospects are always stronger than their short-term problems. And that's why some traders will move in and out of stocks too aggressively, and miss the longer picture, like I did with Apple, buying it at, split adjusted, it would have been like $3.50 and selling it at 10, doubling, tripling my money. But if I would have held on to it, that would have been, now it's at like 100 at that level. So just because there's a couple little short-term problems, sold it to lock in the profits, I missed out on a huge amount of profits if I would have held strong on the stock. All right. Okay. So there's descriptive and analytical information. Descriptive is factual. This is the earnings per share, the amount of sales, the company is going to invest in this or expand. These are just facts. And there's analytical information where people are using the facts and their thinking to make up predictions or recommendations or advice. So the analytical information is trying to express someone's opinion about the facts, so how the facts are tied together. and most times I've always read a lot of analytical information, but I've never found much of it to be very accurate. Uh, a lot of people do some good thinking and they put out some information, but a lot of that analytical information winds up not being so useful or leads you down the wrong path. You know what a good show to watch is? Ever watch Mad Money with Kramer, Jim Kramer, I think it's CNBC? And this is a good show to watch because he talks a lot of different stocks, a lot of different ideas, gives a lot of analytical information on that show. And if you really don't know what stocks to even buy, that's a good show to watch because he does recommend and make a lot of good points in that show. However, I read a research study where they took all the stocks that he recommended to purchase and they sold them. And then they purchased all the stocks he recommended to sell. And they found out that had a much stronger return than buying the stocks he recommends to buy and selling the stocks he recommends to sell. So doing the opposite of what he says wound up to have an actually stronger return than his actual advice. But that doesn't mean, when I watch him, I may just ignore 90% of what he says, but there's also always like one kernel of real good information in that show that could lead you to make some money. So wouldn't say everything he says works, but there's some of them that do work. The one thing that he was very hot on for a long time, Dick's Sporting Goods, and I've been to Dick's Sporting Goods. It's so expensive. I just don't understand how that store is going to be a great investment. Maybe it's a good company and maybe they make some money, but I just don't see. I think a store like that attracted investors because of its growth. It just kept opening up new locations. But in the future, I'm not hot in any type of retailer because of the internet. Makes it so easy, and that's a good reason why all those bookstores closed and record stores, because you go to the bookstore and you see a book and then you find it on Amazon for $20 less with free shipping if you have Amazon Prime. Why not? This is not a sponsored video. But just to let you know, I'm not getting any money from Amazon. But you know what I'm talking about. If you can get, especially your textbooks, I'm sure a lot of you get them cheaper online than at the bookstore. But that's only if you're a person who doesn't wait to the day before class and actually plans ahead, because the shipping can be a real problem with that. Okay, so types of information. You have your economic and current events. So this is what's happening, with jobs, employment, the government, interest rates, current events, as far as political turmoil, different wars, oil issues, countries not getting along, these types of articles. Even something as scary like Ebola. I mean, that has a lot of effects on particular stocks who have potential cures or make products that might be, so if you're thinking long term and you're thinking out there like, okay, Ebola is a problem. What if that spreads to Europe and America? What companies will make more money because of this? Companies that make those rubber gloves or those masks or those smocks or those, all those safety equipment. Maybe those masks you see every once in a while. You see someone on campus walking around with a surgical mask. Maybe people will catch on to that and everybody will start wearing those. I'm not sure why they wear them today, but you see that once in a while. Hmm. Well, look, there's room for both. So why, if wouldn't you rather be wealthy and sick than poor and sick? So at least you could afford the good medical care. Well, if you'd rather not be sick, then you should encourage government entities to send more funding to help the people who have the disease now, so it doesn't spread beyond those countries, because the death rate of that is pretty high. I saw a Frontline show on it last week. It was pretty scary, And then I was sick too at the same time. Like, oh no, I have Ebola. You think you have all the symptoms, but I didn't have it, so that was good. Or maybe I had it and survived it. Industry and company information. This you can get a lot of this information you can get directly from the company. They will send you annual reports, investor relations information. So companies can give you a lot of their stock information as well. And industry information, there is a website that on campus, there's a subscription to it. On campus, they had, if you access a computer on campus, there should be a higher level subscription to Hoover's than if you access it, say, at home. I'm not sure if they're still paying for this, but having this some lag on this. But Hoover's is an area that'll give you industry information. So they'll give you a competitive landscape, a breakdown of the industry, a company search. So Hoover's has a little bit more advanced level tools for investing and especially specifically looking at industry. And it used to be, I can't confirm if it's still that way this year, but it used to be that we had when you logged in on campus, you had a little bit access to higher level of data through the library. I'd have to check with the library to see if that's still true. But this is definitely a site that can be very industry specific. I have to get back to you on whether we still have access on campus to the subscription level. They have like an entry point level where you get the very basic information, but at a subscription level you can download data, get industry reports and things of that nature. Price information is easily enough found on Yahoo Finance, where you get quotes, and you can get quotes from any number of websites that will give you stock quotes. It's pretty common just to get the pricing data of the bid and the ask, which we talked about, the volume of shares traded, and things of that nature. And a lot of different other websites can give you more personal investment strategies. You know, these might not be strategies of smaller strategies, how to set a budget, how to run a household, how to plan your purchases and your balance billing and different things like that. So maybe strategies that help you manage your money better so you have more money for investments. And there is a tendency in our society to waste a lot of money because it's just easier not to worry about it or think about it and not to be question every purchase you make and just so we wind up making lots of small purchases. You know, for example, I could buy water on campus every day and pay $1.75 per bottle, or I could buy a whole case of it for $5 at Costco. So how much? I can get a case of about, say, 40 for $5, and that's going to save me probably, wow. If you leave through that back door, just guide it gently close. Don't let it slam, because some people some people are sleeping right now in here and don't want to wake them up so suddenly. It can be very disturbing to them. So I could save $1.50 a bottle. And if so, over 40 bottles, that's, I don't know, $60. So these small things add up. One area where I saved a lot of money really wasn't water. That's a nice savings, but my biggest savings was breaking my Starbucks habit, which I'd go in every morning. Can I have a grande mocha latte whipped, iced, please? Okay, $4.81. So then just learn to settle on making my own coffee at home, which is less than 25 cents a cup. Buy your own beans. I grind my own beans, just enough for a cup. I don't do that Keurig because I don't like the taste of the Keurig coffee. And it's more expensive too. But Keurig is a big innovation, and actually, because of that Keurig, I should have realized when that was getting big to invest in Green Mountain, the company that invented it and had the patents for it and made the cups for it, because that stock just took off like gangbusters based on that one invention. So there was a misstep by me. I tried the Keurig coffee and I just was like, this is not as good as when I buy my whole beans and I grind them and make the fresh pot. I didn't find the taste as good, so I didn't think it would be a big product. But apparently, the laziness of the American consumer they really love the fact you just put that so clean, put that pot in there, close it, cup of coffee, no mess, no pot to clean, no grinds to deal with. It's fun to work. It looks cool. They come in all different flavors, and it just took off and just made a tremendous amount of money for Green Mountain Coffee. And if you look at their stock, I mean, this is just a phenomenal green Keurig. I actually call it Keurig Green Mountain now. And let's look at. I mean, let's look at the chart on this. And this is all because they invented this new way of making coffee. So let's look at, and this has been around for, I don't know how many years has this Keurig thing been around. Yeah, for a long time. So I mean, at one point, this stock has been under $20 and now it's $130. And going way back, if we go back to say for a long time it traded below $20 all the way up to like 2008 or so. And they come out with this one invention and suddenly it's a phenomenal stock but the Keurig was around a long time before the stock really realized any type of significant growth. So if you would have seen this product, realized its value, another company that did well was a company that makes SodaStream, and that was which I thought was more of a novelty, but apparently a lot of people like the idea of making their own soda. I don't know. Okay. Thank you. All right. Moving on. Okay, so sources of investment information. These are fairly common. The Wall Street Journal is a daily paper. Barron's is from the same company, but it comes out weekly. Investors Business Daily. Investors Business Daily is a more hardcore investor type of paper, which has a lot of ideas. It even gives you a list of like the best stocks to buy based on their ratings matrix. They explain a lot of financial and a lot of investment techniques and ideas. So Investment Business Daily is probably the paper, if you're serious about learning about investments and getting new ideas and becoming knowledgeable, Investment Business Daily probably gives you the best overall education and information on stocks for your money. Again, not a sponsored video. But Wall Street Journal used to be better before 2008 when they laid off a lot of their personnel, and it's just not as informative, as interesting as it used to be. And you can tell that newspapers in general are having a hard time because of the internet stealing a lot of their customers, that they really don't have the resources to make their papers as informative as they used to be. But you also have news services like the Dow Jones, Bloomberg, CNN Money, that websites that give you a huge amount of information on a daily basis. And you have your periodicals, Fortune, Forbes, Business Week. Business Week is another magazine that was phenomenal until 2008, where they had to reduce a great number of their staff, and I think they were sold, and now they're a shadow of what they used to be. I actually think Bloomberg purchased them, so they're really... It's still a good magazine, but it's nowhere near its heyday when they were really phenomenal. Money, Smart Money, Worth magazine. A lot of times these magazines start getting repetitive with what you read it for a year or two, and you pretty much are going to know everything in this magazine for the next 5 years. They cover a lot of the same things for multiple times because there's only so much they can talk about. The government releases a lot of information about economic reports. The Federal Reserve, they release a lot of data and details that can help you. And that's a good way because the economy is the number one influence on most stocks. So if the economy is going bad or going down, then the stock market's going to follow. So it's good to get an idea of where the economy is going. That's why when economic news comes out, sometimes the stock market reacts pretty quickly to it. And right now, everyone is really on edge about interest rates. So if the economic news is too good, stocks may go down because it could put pressure on raising interest rates. So we want this Goldilocks economy where the economic news is good but not phenomenal. So we like it when job growth is like 150,000 jobs or 200,000 jobs, but we'd hate it if it was 500,000 jobs because then the economy is too hot, it's growing too fast. We like GDP to grow 2, 3%. We don't like it to be 5 or 6 because that means the Federal Reserve is probably going to raise interest rates faster, and inflation could be a problem. So this is why we pay close attention to the financial markets. There's also subscription services, which are newsletters that you have to pay for. Some of them can be thousands of dollars a year because they're just so effective. Okay. For specific company information, again, a lot of these same magazines and websites can give you specific company information. Now, there is this regulation FD, fair disclosure, that the government put in place saying that any information that the companies have to tell about the stocks, they have to release wide and publicly. In the past, they were actually allowed to have a meeting with just investment analysts and tell the analysts this is what's going to happen. And then the analysts would go back and they would write up reviews or sell this information to investors. And then one day the federal government said, the SEC said, this is not fair. You can't be giving information for investment advisors to then turn around and make money on to a select amount of people who are willing to pay for it. If you have news or information about your company, you have to have a wide press release and let everybody know at the same time, the analysts and the investors. And that's why that regulation FD is, once that came into play, I think in the 90s, it became or at least maybe the early 2000s, but it made investing a little bit more fairer. Now, company websites always have a stock investor relations area where they can give you their financials. Freeedgar.com is another area where you can get access to SEC filings and financials of companies. So there's more information out there than you can possibly ever read or digest. But it's good to know where it is because if you are investigating a company, you really want to completely investigate them. So if I was looking at Green Mountain, I would have been smarter about the potential usefulness of the Keurig, I would have then went to the financial statements of the company. Do they have enough cash? Do they have a good management team? Do they have a good plan on how they're going to, sell this product? Get as much relevant information about competitors. What is Starbucks going to do? Oh, Starbucks has no clue about this, and they have no competing product at the time. They later did come out with a competing product, but it was too little, too late because once you have the Keurig, you just you don't need a second instant coffee maker. And then so a lot of these other coffee companies like Dunkin' Donuts and Starbucks, they started making their own Keurig pods to put in the Keurig coffee maker with their own flavor, which Green Mountain didn't care about because they got money for them to use their patents to make the pod that's going to go into their coffee maker. So no matter what coffee you use with the Keurig, Green Mountain's getting a little piece of that action. So if I would have figured all this out early and had all this research done, I would have been much more confident in buying the stock. But now at $130 a share, I'm not really confident about buying it at that price level. I could be wrong. It could go 200. Could wipe out all of the coffee products and everything would just be the Keurig and Keurig pods. Does anybody here know anything about coffee? What's the most expensive coffee beans to buy? Yeah.
There's a really weird artisan one that has to do with a monkey that eats beans.
It's actually an elephant that eats the beans, not the monkey.
Oh, is it?
Yeah.
Well, then you know.
Yeah. That's a rarity. But the two most commonly expensive coffees are Jamaican Blue Mountain or the Kona in Hawaii, which are about $50 a pound. Yeah, it's a lot of money. Because they're that much better than, the regular coffees from Colombia or something. Okay, so other sites for information. We talked about Hoover's, which the school used to pay for an advanced account for us. You got to check that. Yahoo Finance is my favorite. Market Watch, we use this for our stock trading game, but there's also a lot of useful news and information on their main site that you should check out. And it's all free, except for Hoover's, but which might be free for students anyway. But there's a lot of good sites to get the information. And there's subscription services that you could pay for, as say Standard & Poor's and other companies where Morningstar, which has a team of analysts that produce analyst reports that are valuable and pricey. They don't give away for free, but you can pay for subscriptions or you can pay by individual report as well if you wanted to read an analyst report. So analysts will write reports on stocks they recommend, but generally the good ones you have to pay for. And they'll do all the work for you. And then if you find an analyst that is actually particularly good and is right, say 6 out of 10 times of what he recommends, that's generally a good one to follow. Dun & Bradstreet provides a lot of comparative data for companies. Standard & Poor's, which we just talked about, brokerage report, investment letters. These are all areas to get more industry and company information. So stock and investment information is valuable. So there are all sorts of strategies and companies at different levels of how they're going to get it to you. Some do a model where it's free and they support it by advertising, but many of them do subscriptions like to magazines or newspapers or information services like Dun & Bradstreet or S&P 500 to get, if it's valuable and useful information, they'll find some way to charge you for it. And if it works, if you pay $50 to get a subscription, but you're making $10,000 a year off of this information, then that's worth it. Even a subscription to Investor Business Daily, that could be expensive. It's not a cheap subscription. It's even, but if you're making money from it, getting ideas, and it's leading you to make profits, then it's worth it. It's a business expense. But start with the free information first and work your way up before you start paying for the information that costs. Okay. So we talked about this before. Quotations, stock quotations are everywhere. They're even on the TV. They ticker at the bottom of a lot of news stations. A lot of just general purpose websites have them. So you can easily go anywhere and get a stock quotation. And we talked about that a little bit last month. But the key thing is that you need the stock symbol. But many of these stock quotation sites will let you type in the name of the company, and they'll come back with a list of potential stock symbols to pick. So if you're in the stock market, the virtual stock game, and you're having a hard time finding the stock symbol, Yahoo is actually pretty good at doing that. Okay. There are plenty of other websites around as far as financial portals, bond sites, mutual fund sites. So every mutual fund company has their own website that tells you everything about their mutual funds, who's involved in them, who I know I like to go to this Barron's Funds mutual fund website, and Barron's is a mutual fund company run by Ron Barron. In New York City, and he has an annual conference every year. Which if you invest in one of his mutual funds, you can go to his annual conference. And the big thing about his annual conference, there's Ron right there. See, he's always smiling. He has a group of very successful mutual funds that typically beat the market averages. Now, what's interesting about his conference, I've been to it a couple times, he always has an A-list celebrity performer, like Mariah Carey, who's that Canadian singer that's popular down here? Celine Dion. I just can't think sometimes. Lionel Richie. These are performers for older people because that's generally who have money, who have put money in mutual funds. So, but he usually gets, 1 year at Bon Jovi, Bruce Springsteen. He gets, top-notch entertainment for these conferences because mutual funds are profitable. And this is his website. You get information on, all the different prices of all his mutual funds, and you can click on a particular mutual fund, and then it'll go into the, their strategy and objectives of the mutual fund managers, the companies they own, the performance charts, just more data than you can shake a stick at. So mutual fund companies are a good area because the mutual fund managers always want to talk about, and actually Ron Barron's pretty good about talking about the overall strategy and overall picture of the economy and stocks. And so he has a lot. I like his quarterly reports he sends to shareholders. But that's just one of many mutual fund sites. that has a lot of information and data and investment strategies that you can go to learn more about stocks. Now, the one problem in the financial world is there are a lot of scams. And it's no fun to be scammed and have your money taken on you. And we all have potential to be a victim of this. If you see, just look at your email from, I can't tell you how many various banks or princes have money for me from Nigeria, and, just, different click here or hello, and there's a link, and you click the link, and, um, and the stock world has its share of manipulation too. False news, fake news. There are message boards where people talk about stocks, but they lie. They try to pump and dump them, which means they want to promote the stock as much as possible to get you to buy it, so the price goes up, and then they sell it. And in penny stocks, it actually is pretty common. There was a teenager from New Jersey who made close to $1 million of profits trading, going to all these message boards and bulletin boards with multiple accounts and just talking up the stock as 16 different people. So you go to this message board and look like 16 individual different people were saying how great the stock was. I bought at this point and it went to this price. And he was able to talk these penny stocks up and make a huge amount of profit for himself. However, eventually the SEC caught on to this and arrested him and seized his money and took it all back. He was lucky he was underage, so he didn't get that harsh of a punishment, but they did take all his money. So, you got to be wary of these particular schemes, and anything that's a get-rich-quick scheme, or anything that has a scheme that's sort of in the shape of a pyramid, right? Anybody come up to you, hey, I have this business I'm starting that's really great. I'd like your help with it. You interested in going into business with me or being part of your own business? Anything that starts out that way is generally a scam or a pyramid scheme. If they don't tell you what the business is, they just keep saying business, I have a business, I want to start a business, join my business, be part of my business network, be part of the downflow of your business network and getting other members to join our business group. And then you're just like, well, what the hell is the product? Well, it's not about the product, it's about our network and our group. So these are all scams and pyramid schemes, and generally, in order to make money, you have to you're the sucker at first, and then you have to find 20 other suckers who will sign up underneath you. And then you look at the products and like, well, no one ever buys these products. I never see them for sale anywhere. They're just cheap knockoffs of what I can go to Pathmark and buy. So why would I buy your energy drink or your knives or, over what's, easily purchased 20 feet from my house or online? So stock world has its share of this as well. So you got to be careful of, people who are too eager to convince you to buy a stock. There's got to be a reason for it. Because you know what? You don't need to tell other people about good stocks. You just need to buy it yourself. Let them find out on their own. All right. So 5 key questions to ask is, if someone's trying to sell you something, especially in the stock world, are they licensed? Are they registered? Is the investment registered? Is it, something that's official? What are the risks that you can think of compared to the rewards? If the rewards far outstrip the risks, probably a scam. Do you understand what the investment is? And there's a lot of people who don't. I remember when the investments were such a frenzy, people only knew the stock symbols. They didn't even know the name of the company or what they did. Just got to get this, stock symbol. And that's a bad sign. And, where can you turn to help if you feel like you've been scammed or been part of a fraudulent? And the SEC definitely is listening to and wants to hear from you if there is a scam that's happening. All right. Now, to understand how the market does in general, we have all these indexes and averages available to you to understand how the stock market has been performing over time. And we have the Dow Jones, the S&P, the NASDAQ, the New York. Any particular way you can group a set of stocks, you can create an index or average for. So if you want to do it by country or by region or by company or product or industry, all these different methods, you can group a set of stocks and form an index or an average for it, which basically just calculates a return. So it puts the stocks together and figure out what the return is on a daily, monthly, annual basis. So the Dow Jones Industrial Average is probably the most common, and the S&P 500 is probably the second most common. But in this, starting next class, we're going to actually calculate these averages because there's a difference between an average and an index. Mathematically, one is superior than the other. And you need to understand how they're calculated. And you need to understand the value of these different indexes or averages as far as how you're tracking your stocks. So if you wanted a better idea of how the stock market is doing, the Dow isn't really the best indicator. The S&P 500 is a better indicator because that covers 500 companies, not 30. So this will be our last slide today. The Dow Jones Industrial Average only looks at 30 stocks. These are 30 very big, well-established companies, but still it's only 30 stocks that tracks their activity. Now, the Dow Jones has many different averages, such as a transportation average, which only has 20 stocks. And these were created over 100 years ago, these averages were created. And it was at a time where this was probably one of the few pieces of information people had about the stock market. It was only recently, and especially the last 20 years with computers and the internet, that information has been so widely available and so readily utilized, and that so many new indexes and averages have been created to help you keep track of the market and how things are doing. On the negative side, there's far too much information for you to digest. So it takes a certain amount of skill to figure out what it is that you want to look at and read and spend your time with. And that's where a lot of investigation and research comes. So starting next time, we're going to look more closely at the mathematics of calculating these indexes and averages, and then the particular value to use them for investing. Okay. Thank you.